Yes, pleasant morning to everyone. So in today's session, we will be discussing some important RTP questions from very important chapters, that is chapter 6, chapter 7, chapter 8, and chapter 9. We've already covered until chapter 4, chapter 5. We are covering now chapter 6, chapter 7, chapter 8, and chapter 9 in today's session. Okay, so very important chapters. Chapter number 6 is audit in an automated environment. Chapter number 7 is audit sampling. Chapter number 7 is chapter number 8 is audit sampling. Chapter number 9 is analytical procedures, right? So all these are very small chapters, very important chapters. Okay, just to give a brief background, chapter 6 is audit automated environment, chapter number 7 audit sampling, chapter number 8 audit analytical procedure, and chapter number 9 audit of items of financial statement. Sir, in that audit of items of financial statement alone itself is 16 marks. They ask one full question for 16 marks at CA inter level. Chapter number 7 and chapter number 8, one of the two, one question comes. In one attempt they ask audit sampling, another attempt they ask analytical procedures. Now because there's MCQ, you can expect questions from both the chapters. So put together these two chapters, you can get around 4 to 6 marks from audit sampling, analytical procedures. From chapter number 6, there's a short 4 to 6 marks again. Okay, or in the chapter number 6 is audited and automated environment. So all the chapters are very important. Chapter 6, 7, and 8 you should never leave, because these are very simple chapters and they short will give you some marks. So that is why you should not leave these chapters in choice. Chapter 6, chapter 7, and chapter 8. Chapter 9 is a different chapter in itself. You may have to think whether you want to do this or you don't want to do this. So that's something which you can discuss if you have any doubts. Right now, let me go ahead. Question number 1. The auditor should consider relevance of income tax or information technology. It's information technology, right? The auditor should consider relevance of information technology in an audit of financial statements. Explain with reasons. Sir, it is a very simple question. Just give me. I'm sorry. The auditor should consider relevance of an information technology in an audit of financial statements. Explain reasons. Sir, very important question. First, by reading the question, the preparedness should be so much that by reading the question, we should know from which chapter it is. So at the moment it says IT, okay, and relevance of IT, there's only one chapter, which is chapter 6. Okay, very straightforward question. No, this thing. In fact, if you look at your study material, there are some few points which talk about relevance of information technology. That's the answer. So going to the answer, the auditor should consider relevance of information technology in an audit of financial reasons for the following reasons, right? So an auditor relies on reports. There are 6 points in the beginning of the chapter. There are some 6 points. So always when you read the question, it is important. Any point-wise answers are very important. Point-wise, anywhere where there are points, that could be a potential question for the examination. So knowing the answer is not important. Knowing the question and the answer is more important, because you should know which answer is for what question. You may read the answer, you may study the answer, you may memorize the answer, but if you don't know what is the question, then everything is gone for a toss, right? So the studying since auditors relies on reports and information generated by IT systems, there could be risk in the IT systems that could have an impact. So first one is auditors rely on reports and information agreed by IT systems. So information generated by IT systems. Standards on auditing, SA 315 and 330 require the auditors to understand, assess, and respond to risks that arise from the use of IT system. Correct? Then, by relying on automated controls and using data analytics in an audit, it is possible to increase the effectiveness and efficiency of audit process. So these are the 3 points. 3 points, 3 marks, right? So the auditors should consider the relevance of an IT. IT, why it should be considered, sir, in an audit? Because today's world, we completely rely on information technology, right? Any audit you do, even a small audit that you do, an MSME audit, even he uses Tally. Again, Tally is as a software. So IT is becoming completely prevalent today, and without IT we cannot survive. So first one, information, reports and info. Always you have to use catchwords. Okay, reports and information. Second one, my standards require me to do so. Third one, I rely on automated control. So ISC, information, reports and information. Information. S stands for standards on auditing, and C stands for controls, automated control. So ISC. So because of these three reasons, the auditor should consider relevance of IT and audit of financial statement. In considering the characteristics of the population from which the sample will be drawn, the auditor may determine that stratification or value weighted selection technique is appropriate. Guide the auditor on the use of stratification and value weighted sampling techniques. Sir, very clearly, first we need to understand what is the chapter. The chapter is chapter number 7, audit sampling. Clear, sir? Now, the question is very clear in the first line is useless to us. The question is very clear in the second line. Second part of the question, guide the auditor on the use of stratification and value weighted sampling techniques. Okay, so the question is two-parted. Two parts. So stratification and value weighted sampling techniques. So stratification, we all know what is stratification. You take a population, you divide the population. The general dictionary meaning of stratification is dividing, right? You divide the population into multiple strata, into subpopulation, and then you take samples, from each strata. So why do we divide? To diversify the risk. Because there's something called a sampling risk. So we will divide basis some kind of a some kind of a framework. We'll divide basis values. We will divide basis aging of the balances, if it's a trade receivable or trade payable or inventory, right? So some underlying reason or basis will be used for dividing. That is called stratification. Value weighted selection. So there are 5 techniques which are covered in the standard SA 530, which you would have studied as part of the chapter also. Monetary unit sampling is one of the value weighted sampling techniques. That is, you give importance to value. You don't give importance to the count. So that is what is value weighted sampling techniques, right? So let us see the answer. In considering the characteristics of the population from which the sample will be drawn. So whenever we give, so one more important thing, whenever we talk about a particular standard, we always require to give the reference of the standard. Right. So in this case also they have mentioned SA 530. So when you know the standard is from 530, from a particular standard, when the question is from a particular standard, please do give a quote of the standard. So you have to start with the words as per SA 530 and give the name of the standard, audit sampling. The name of the standard is more important than the standard itself. I always keep telling in my class. So as per SA 530, audit sampling. That's the word that you'll have to use. Okay, going forward. So in considering the characteristics of the population from which the sample will be drawn, the auditor may determine that stratification or value weighted selection technique is appropriate. SA 530 provides guidance to the auditor on the use of stratification and value weighted sampling techniques. Stratification. Audit efficiency may be improved. Audit efficiency may be improved if the auditor stratifies a population by dividing it into discrete subpopulation which have identifying characteristics. It could be a value based, it could be based on balances, it could be whatever. There should be some underlying basis based on which you are dividing the population. The objective of the stratification is to reduce the variability of items with each stratum and therefore allow sample size to be reduced without increasing the sampling risk. So what does this mean? You have a population of 500 items. You divide the population into 100 items. So now you have five subpopulations. From each of the subpopulations, you will choose samples. Now, why did you do that? You are, the 500 count of population, it's difficult to take samples. Now, if I divide it into a common characteristics, I can concentrate on the subpopulation which is more risky. I can take more samples from there, and I can take lesser samples from subpopulations which are not very risky. Okay, so if I'm dividing basis of value, then population having a higher value, I'll take more samples. Thereby, my overall count of samples will also reduce. That is, that is why this is done. And this is done, practically also we do this. We do, if it's a challenge, practically also we actually do this, right? Now we go on to value weighted selection. When performing test of details, the population is often stratified by either monetary value, This allows greater effort to be directed to larger value items, as these items may contain the greatest potential misstatement in terms of overstatement. Similarly, a population may be stratified according to a particular characteristics that indicates a higher risk of misstatement. For example, when testing the allowance for doubtful accounts in the valuation of accounts receivable, balances may be stratified by 8. So you can bucket the balances 0 to 30, 30 to 60, 60 to 90, 90 to 180, more than 180. So you will concentrate on more than 180 because that's more risky, right? Dividing a population into discrete subpopulations which have an identifying characteristic is called stratification. Each population is called a stratum, and units under those subpopulations are referred to as strata. Okay, and units under those I don't think that's right. Each subpopulation is called stratum, and plurally you call it strata. That's what it means. The results of audit procedures applied to a sample of items within a strata can be only projected to the items that make up that stratum. To draw a conclusion on the entire population, the auditor will need to consider the risk of material misstatement in relation to whether other strata make up the entire to draw a conclusion on the entire population, the auditor will need to consider the risk of material misstatement in relation to whatever other strata make up the entire population. Sir, I don't know if you've understood this line, but let me explain this very clearly. So now you're dividing into 5 strata. Okay, each of the strata. So I'm generally, as part of sampling, we select the samples, we do the audit procedures, then we find out misstatements. If there are misstatements in those samples, then we project those misstatements, okay, over the entire population, right? So for in the sample they have taken, if there is a 10 lakh misstatement, then that 10 lakh is for the samples. How much is on the population? So that's called projecting the misstatement. Now, when you divide the population into multiple strata or stratum, right, you will have to, if and in each of the stratum, if there are, misstatements, then you will have to project the misstatement. You cannot project the misstatement over the entire population. You have to project the misstatement on that strata, right, on that subpopulation, and then you have to aggregate all that, of each of the 5 subpopulations that you have, projected misstatements. On each of the 5 projected misstatements, you have to aggregate, and that aggregated amount will be the, projected misstatement on the entire population. Is this clear? Do you want me to explain this again?
No, sir, it's clear.
The result of samples from the units of drawn under each population are projected to that respective stratum. In order to draw an opinion on the overall population, the auditor needs to combine the results of all the stratum to check for possible deviation or risk of material misstatement. I think I just explained. Projected misstatement of each stratum will be combined together to consider the possible effect of misstatement, account balances, and classes of transaction. What do you mean by classes of transaction? What do you mean by classes of transaction? What do you mean by classes of transaction? Any idea or no idea? Okay, if you don't have any idea, I am more happy to explain. What do you mean by class of transaction?
Sir, you explain, sir.
Okay. Classes of transaction, in very simple words. See, in auditing, we have certain jargons. Let me put it this way. Those jargons are there. Every subject has its own jargon. Similarly, auditing also has its own jargons. In auditing, there are 3 words which have been used, repeatedly: classes of transaction, account balance, and disclosure. If you read your study material, you will see these 3 used everywhere, right? Account balances, class of transaction, disclosures. Basically, class of transaction means P&L items. All the P&L accounts, all the nominal accounts are called classes of transaction. In audit, we don't call it, P&L transaction. We call it classes of transaction. Similarly, all the balance sheet accounts are called account balances. What you are hearing here is account balance means balance sheet accounts, and class of transaction means P&L transactions. P&L accounts, balance sheet accounts, right? And disclosures mean notes to accounts. So we don't call it P&L transaction, balance sheet account, and notes to accounts. We call it account significant class of transaction, account balance, and disclosures. In audit, this is the terminology that is used, but it means this one. Clear? example, I mean, 20% of the items in a population may make up 90% of the value of a. No, this is a very exaggerated answer. You can give, you can stop. My sense is you can stop till the previous slide, till here. You don't have to give example, 20% of the items in a population may make up 90% of the value of an account balance. The auditor may decide to examine a sample of these items. The auditor evaluates the results of this sample and reaches the conclusion that 90% of the value separately from the remaining 10%, on which a further sample or other means of gathering audit evidence will be used, or which may be considered immaterial. Right? So this is an example. 20% of the items make up 90% of the population. Right? So we will take these 20% as samples and we will evaluate rather than using that remaining 10%, because that may be immaterial. Now, the next is value weighted selection. When performing the test of details, it may be efficient to identify the sampling unit as individual monetary units that make up the population. So each sampling unit, that is each line item in the population, is a separate monetary unit, right? So based on which you're taking samples. That is why it's called value weighted selection. You give importance to value. Our monetary unit sampling is a value weighted selection method. Clear? Having selected specific monetary unit from within the population, for example, the account receivable balance, the auditor may then examine the particular item, for example, individual balances that contain those monetary units. So stratification is dividing the population. Value weighted selection is giving importance to value to select a sample. That is what is meant by value weighted selection. One benefit of this approach to defining the sampling unit is that the audit effort is directed to larger value items because they have a greater chance of selection and can result in smaller sample size. So you will concentrate on units that have a larger value. Okay, you will concentrate on transactions, say more than 1 crore. You will not concentrate on transactions that are less than 10,000. That is immaterial. This approach may be used in conjunction with the systematic method of sample selection and is most efficient when using random selection. In a value weighted selection, the sample size, its selection, and its valuation will result in a conclusion in monetary amount. Sir, this is the technique that we use practically across all sampling MUS. We don't use systematic sampling. We don't use random sampling. We don't do haphazard sampling. We don't use block sampling. That's a rarity. Right? This MUS is the most widely used technique. If you start your horticulture, whenever you will be using this only, for preparing for doing your samples in a practical scenario audit. Clear? So in value weighted selection, the sample size, its selection, evaluation will result in conclusion. Forward is question number 3. Data analytics can be used in the testing of electronic records and data residing in IT systems using spreadsheets and specialized audit tools like IDEA and ACL. Okay, to perform the selection of audit samples. Explain giving other relevant points also in the above context of data analytics. Sir, this is a question first you need to understand. They talk about data analytics. Data analytics is only spoken about in chapter number 6. Okay. Sir, what do you mean by, what is the question trying to refer? Basically, the question is asking what is the usage of data analytics. Where and all in audit, where and all we can use data analytics. I repeat the question. Data analytics can be used in testing of electronic records and data residing in IT systems using spreadsheets and specialized audit tools, that is IDEA and ACL, to perform selection of audit samples. Explain giving other relevant points also in the above context of data analytics. So basically the question is, tell me where and all you can use data analytics in audit. Right? So here is the answer. Again, this is a point-wise question. So how do we remember this point-wise question in the examination? Very simple. You have to use catchwords. I always tell this, you have to make some catchwords and you have to use the catchwords. If you remember the catchwords, because always in audit we have a starting problem. How to start? We would have studied like 10,000 times, but we would in examination we will forget. So we need to have a starting push problem. So we need to memorize some catchwords for that answer. If we know the catchwords, then we can write. You don't have to write verbatim what is given in the book. You can use the keywords and you can write on your own. That is allowed. Right? So first we'll check completeness of data and population that is used either in test of controls and substantive audit tests. So you can use data analytics for the following to do the following things, right? First, completeness of data. C, selection of audit samples. Yes. Recomputation of balances. R or B. Reperformance of mathematical calculation, depreciation, bank interest. So here you can automate this. Okay, bank interest can be automatically calculated. You don't have to sit and do it, right? Analysis of journal entries as required by SA 240. Sir, SA 240 is the chapter on fraud, or is the standard on fraud. It requires that we need to analyze the journal entries to see if there are any entries which are, which are unusual, like which are passed on holidays. I mean, that's called the journal entry testing. I mean, it would have been taught as part of chapter 5. Fraud investigation. Yes, you use a lot of data analytic techniques for doing a fraud investigation, evaluating impact on control deficiencies. So yeah, wherever there's a control deficiency, we kind of do it. So how many points are 1, 2, 3, 4, 5, 6, 7 points there? So if I have to give you a catchword, C, selection of audit sample S, recomputation of balances B, CSB, mathematical calculation M, analysis of journal entry J, CSB MJ, right? Fraud investigation F, and control deficiency. This is the catchword. CSB MJ FD. Sir, this may sound very silly. I mean, how to remember? I mean, this is very silly. This is actually helpful. I studied for my examination. I used both in CA Inter, CA Final, and for any theory paper. Okay, I use these techniques to kind of remember the answers, and it was very helpful. So therefore, it would be great if you can use it. So number 4, the design of a substantive analytical procedure is limited only by the availability of reliable data and experience and creativity of the audit team. In this context, discuss the techniques available as substantive analytical procedures. So the first part of the question is absolutely useless. They're just, this is what we need to concentrate on, right? Discuss the techniques available as substantive analytical procedures. Very, very widely asked question in the examination, right from May 2018 up until December 21. I think this question has come at least, twice or thrice. In May 18, the first time it was asked in May 18. Okay, this question has been asked like so many times. Okay, so we should know this answer. I mean, I'm sure you guys will know this answer. There are 4 techniques, right? Ratio analysis, trend analysis, reasonableness test, and structured modeling. These are the 4 techniques. 4 points, 4 marks. So answer, going on to the answer, techniques available. Design of a substantive analytical procedure is limited only by the availability of reliable data, experience, and creativity of the audit team. Substantive analytical procedures generally take one of the following forms. One is trend analysis. Trend analysis means what, sir? Comparing the current year numbers with the prior year numbers, or comparing the current year data with the budgeted data, or comparing the current year data with the industry data, right? So you compare the transaction, compare the movement. So this is a very widely used thing. Everyone uses this, right? If suppose you want to see the results, okay, so you want to see what is the revenue trend. You take 3 years trend and you compare how the revenue of a company has moved, whether it has increased or reduced. If it is increased, what is the percentage of the CAGR, compounded annual growth rate? If it is reduced, what is the percentage of the CAGR? Similarly, you go through all the transactions and you find out where the variance is and what is leading the variance. That is something which you have to ask the management. Very commonly used technique is the comparison of current data with the prior period balance, and this we do in audit practically also. Or with the trend in 2 or more prior period balances, we evaluate whether current balance of an account moves in line with the trend established with the prior balances for that account, or based on an understanding of factors that may cause the account to change. So if there's whether it is going in the same trend, or there's a deviation, if there's a deviation, why the deviation? That is something which we'll have to ask the management. Next is the ratio analysis. I'm sure you know about this. You've been studying right from your CPT. What are the different kinds of ratios? Ratio is so this is also very important. We get a lot of insight about the company by doing certain basic ratios, like for example, net profit ratio, gross profit ratio, account receivable ratio, inventory turnover ratio, debt coverage ratio, all that we don't do it for 1 year. We do it for 2 years and we compare the movement. Okay, so that we compare the movement and see how the ratios have moved, right? So ratio analysis is useful for analyzing asset and liability as well as revenue and expense account. So there are some balance sheet ratios, there are some P&L ratios, right? An individual balance sheet account is difficult to predict on its own, but its relationship to another account is often more predictable. Example, trade receivable balance to the sales. So it is your debtor turnover ratio, how the debtor is moving. So what is the formula? Sales divided by average receivable, correct? Ratios can also be compared over time or to the ratios of separate entities within the group, or with ratios of other companies in the same industry. This is something which we do practically also. Reasonableness test. So to simply put, reasonableness test is developing an expectation that is sufficiently precise and comparing your expectation with that of the actual amount. For example, I take the rent. Okay, so I have the rent agreement, everything with me. Okay, rent, there's a 12-month rent. So I know what is the square feet, everything. So I develop an expectation that this should be the rent that the company has to pay. This is the rental agreement. And that expectation I compare with the actuals. Okay, and see ideally there should not be any difference. If there's a difference, then I see what is how material is the difference, and then I investigate the same with the management. So that is what is reasonableness test. Unlike trend analysis, this analytical procedure does not rely on events of prior periods, but on non-financial data for the audit period under consideration. Example, occupancy rate to estimate rental income, so interest rate to estimate interest income or expenses. These tests are generally more applicable to income statement accounts and certain accruals or prepayment accounts, right? Last one is structured modeling. Not very vividly used in audit, but it's a modeling tool. Like you have your y is equal to ax plus b, your regression statistic. So you use that particular formula, and if there is any semi-variable cost, to kind of use that particular tool and identify. Right, a modeling tool constructs a statistical model, okay, from the financial and non-financial data of prior accounting periods to predict current account balances. So it's basically a model. This we generally don't use in audit, but we use when time of invest. If you are into investment banking, you kind of use this model. You create a model of this is how a financial should look like by putting some assumptions, and then you put the data, and then automatically the numbers will populate. So this is not something we do in audit, but definitely we do in other streams of our work. So these are the 4. Going to question number 5. APQ deals in real estate and classifies all of its land holding under current assets as inventory. The same is therefore valued at cost or market value, whichever is less. How would you verify profit or loss arising on sale of plots of land by such a dealer? Sir, clearly the question is from chapter number 9, audit of items of financial statements, right? A very, a very nice question being asked. Okay, again, I repeat the question. You are a real estate person. Okay, so your land and building, your land, I mean, real estate's only land, there's no building. You are, your land that you're holding, you classify it as inventory. You're not classifying it as, a fixed asset, because it's the business that you're doing. Okay, so therefore the same is valued at cost or market value, whichever is lower. How would you verify profit or loss arising on sale of plots of land by such a deal, right? So you have to give on such questions, you always have to give point-wise answers. Point 1, point 2, at least if the question is a 4 mark, at least 6 points should be mentioned. That's the thumb rule. Okay, if the answer itself is in 3 points, then you mention the 3 points. I'm just giving a thumb rule, right? So land holding in case of a real estate dealer will be a current asset and not a fixed asset. Yes, because he's in the business of real estate. The same therefore should be valued at cost or market value, whichever is less. The amount of profit or loss arising on sale of plot of land by such a dealer should be verified as follows. Yes. So we need to check every property shall be examined from the beginning of the development. So how will you calculate the profit or loss when you sell the asset? So that is what is being mentioned here. Each property should be examined. So whether appropriate costing is properly booked, that is what is very important here. Each property account should be examined from the beginning of the development with special reference to the nature of charges, so to find out that only the appropriate cost and charge have been debited to the P&L, and total cost of property has been set off against the price realized for it. So basically this is the sale value, and all the costs. So just buying the land is not the only thing. There are stamp duty attached to it. There would be some maintenance charges, or the correct. So when you see AS2 inventory, to the extent you're buying the inventory, till the time you buy the inventory, whatever cost that you're incurring, all that should form part of the inventory cost, right? So all that has to be taken into account before inventorizing the land. The base of distribution of common charges between different plots of land developed during the period, and the base of allocation of cost to individual properties comprising a particular piece of land should be scrutinized. So if there are any common charges, we need to understand first, we need to inventorize these charges or not. And if we are inventorizing these charges, we will have to see how we are going to allocate if it's a common charge, and how do we identify specific charges to separate land and property. If the land price lists are available, then these should be compared with the actual selling price obtained, and it should be verified that contracts entered into the respect of sale have been duly sanctioned by appropriate authority. Yes. So whenever there's a sale of land, you need to compare that sale of land with the appropriate contract. That's very, very important. Whether part of the sale price is intended to reimburse taxes, or expenses, suitable provisions should be maintained for the purpose. The price obtained for various plot of land sold should be checked with the plan map of the entire tract, and any discrepancy or unreasonable price variation should be inquired into. The sale price of different plots of land should be verified on a reference to certified copies of the sale executed. So always such kind of questions, the question is on how you will verify the profit or loss. So how do you determine the profit or loss? The sale price minus your cost price, right? So you have to see how you can validate your sale price. How will you check your sale price? By using the sale agreements, by checking the sale. That is one of the points. Cost price, you have to use AS2 provisions. Okay, you have to use AS2 provisions that all the cost has been allocated. Common charges has been split properly, and the specific charges have been allocated properly. How they are identifying those specific charges? Those are the points that you'll have to mention. Okay, out of the sale proceeds, provision should be made for expenditure incurred on improvement of land, which so far has been accounted for. So yeah, so this is the last point. Out of the sale proceeds, provision should be made for the expenditure incurred on improvement of land, which so far has been accounted for. So this is the last.